Well, good morning everyone and welcome to this morning's daily report. It's 4:33 a.m. right now, GMT, and it's the 20th of September. And we're going to have a look at the charts going ahead for this week. First thing I want to do is just point out the trade on Friday, though, for those of you who are wondering where it came from. And I'm just going to zoom into the Euro chart. This line has actually just been redrawn, but over there's a resistance level at that black line, and you can see we're at the top 100 period Bollinger Band, just through the 200 period Bollinger Band, and we had an overbought stochastic, and we had this little tiny hanging man candle. That's the one just above the mouse cursor right there, and that formed the trigger to get into a counter trend G7 trade. Now, for those lab rats who've only been with me for a week or two, you naturally we haven't been through the counter trend trading setups and how to trade them and what sort of candles to look for, what sort of stop losses and targets and so on. But this trade went perfectly to the 100 pip target, which was at this line over here at 1.3050. After having got in at 31.50, we got out at 30.50 after a series of losing trades during the week, and there were a number of losing trades between 20 and 30 pips in loss each. Each time going with the weekly trend. We'll talk about it more in the session tomorrow, and then we had this counter trend trade which proved out to be the winner. Just wanted to point that out to you, but we will cover it in more detail in session tomorrow. Let's have a look at what's ahead this week for us, and I'm going to get out the weekly chart for the Euro. Very easy this week, in fact, because what we've got is a strong bullish week last week. Just going to leave these indicators on. As you know, they're just there because they're from the hourly chart. They've got no bearing on the weekly chart at all. But the weekly direction last week was clearly bullish. We had a much higher high and a slightly higher low, but this big bullish engulfing candle. And what we're looking for this week is a continuation of that bullish trend as long as we're above last week's low. Now, last week's low was at 1.2680. So that's the weekly reversal level, and what I'm going to do is, as normal, just draw a big red line across there, 1.2680, and I'll make that red, and that'll transfer across to my hourly chart so we can see clearly where the weekly reversal level is. So 2680, it's about 400 pips below where we are at the moment, so we've got plenty of scope beneath us for dips to occur that we can buy into. So there's the weekly reversal level. That's where we are right now. We've got 400 pips between the bottom of last week and where we are now, and we'll look to buy the Euro into dips. So let's go back to the hourly chart, and I'm just going to get rid of that favorites bar, and if I just squash it down, you'll see there's the weekly reversal level. So as long as we're above there, we can continue to buy the Euro into dips, and we're looking for retracements back to some of the support levels. So what I'm going to do is just remove this old Fibonacci, and you can see there's the most recent swing low, and there's the most recent swing high. So I'm going to draw the Fibonacci from the bottom to the top, looking for support areas to buy into, and there they are: 38.50, 61.8, 78.6. There's the levels. If you want to write them down, you can just pause the video now and write them down on your own in your notebook, or you'll put them on your charts or whatever. But these are the areas that we'll be looking to buy into. Now, before that happens, we're going to need the moving averages or the Bollinger Bands to be in the same vicinity, and we're going to need the stochastic to be at an oversold position. Right now it's moving up to overbought. The other thing I can do is quickly draw in some black lines. So I'll draw one right there. That's an obvious one, right across the tops of these two highs. I can draw in one right there, which is formed by this little previous resistance level which became support, and I don't have to have that one at the top there because I've already got the fib there, so that line's there already. So there's a couple of black lines. There's the fibs, there's the moving averages, there's the stochastic. Simple as that. Takes me just a couple of minutes to draw them in, and what we're looking for is for the Euro to move down to some of these levels, and to give us an entry trigger at the same time that we're near one of the moving averages or Bollinger Bands and the stochastics oversold, and then we just wait for the entry trigger and enter the trade based on the probability and price action. That's what we're looking for. So that's the euro setup, and I can just save that file. And pretty simple. Buying into dips whilst we're above that red line. There's the support levels. Just waiting for the Papa setup. Probability. Waiting for the dip down to the areas of probability. Then we're waiting for the price action to give us a buy trigger. And then we'll use the standard exit rules that we've discussed most recently. 100 pip target and using the candle exit rules as discussed before. Alright, so that's the euro, and I can now just get that out of the way. I'll just save that. Now let's have a look at the pound. Pretty similar, really. First thing I'll do on the pound is to get the weekly chart up. And we'll have a look at last week's candle, which was very similar to the euro. Big bullish candle. And you can see there's the low of the candle, there's the high, 1.5350 odd, 1.57, so about 350 pips higher at the end of this week than the close. And what I'm going to do is again just draw a big red line at the bottom of last week, so that's the weekly reversal level, and I'll just make that red. So whilst we're above this level, we'll be looking to buy the pound into dips as long as we're above there, which is around 1.5350. So I can go straight back to the hourly chart, reset that, and get rid of this toolbar at the top. Right, now so we want to buy the pound into dips, so what I'm going to do is just remove that and compress the chart, and I'm going to look for the swing low off the bottom here, which is right there. Draw it up to the swing high, because we're looking to buy the pound. So we draw the fib from the bottom to the top, and there's the retracement levels all down, 38.50, 61.8, 78.6, and then there's the weekly reversal level, which goes across there. The other thing I'm going to do is put in some black lines, just very quickly. I can put in one in there, based on that previous high. Actually, I can make this just a little lower, I guess. Oh, that looks about right. It's not exact, as I said, it's approximate, but that's pretty good. And I can draw one just a little bit lower, around about here. Previous high there, and previous low, so that resistance became support. And I'll leave it like that for the moment, because we're a long way above the moving averages, and we need to either wait for those to catch up with the price, or for the price to move down quite sharply. So we may have a bit of a wait at the beginning of the week for entry opportunities on both these currencies, and we'll just have to be patient and wait for the opportunity to pounce onto the trading opportunities. So very similar scenario for the pound and the euro, both bullish, weekly reversal levels quite a long way beneath us, and I've just drawn in a couple of black lines and the fibs for now. And once you start to have a look at your charts a little bit more closely, you can see where those lines are. So we're looking for a move down to somewhere around here right now, and for all the G7 conditions to be in place, plus a trigger, and we'll be away on our first trades of the week. If the euro and the pound continue to move higher from here and don't move down for a decent retracement, then we'll have to adjust our settings as the week goes on. But of course, we'll be able to do that during the live sessions and have a look at that more closely. So that's the scenario for the week. Last week was quite tough, but the trades on Friday more than paid for the losses during week, and that's just the way it goes with swing trading. Sometimes you get these weekly whipsaws, nothing to worry about, and it's quite normal. And the whole adage of let the profits run, or one good trend pays for it all, that's the way it worked out last week. I'll see you in session tomorrow, and I'll send out alerts as normal today if and when there are any G7 trades. Take care.